Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to assess various asset classes. And now, on today's series, we will be focusing on the decision taken by the Reserve Bank of Australia to shift from fiscal policy to monetary policy, or as economists, pundits would put it, a shift from dovish to hawkish economic approach. And by that, we would see it is simply means changing from enhancing the economic growth through sections of the economy, like improving employment, to monetary policy or hawkish, which means controlling the economy based on monetary policy. And by this, we mean adjustment of interest rates decision. That would lead us to look at the implication of that on the Australian dollar, of course, in relations to the United States dollar. And later we shift to stocks to see the implication this would have on indices or families or basket of stocks. But before we jump right in, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video, to mean that you could access this video on our YouTube channel at HFM Kenya. Kindly like, subscribe, click on the notification button so that you're not left out in future content that we produce from time to time. With that in mind, we begin from fundamental analysis to have a discussion on that. On hfm.com, when you come to tools and education, and you click on economic calendar, it's going to bring you to economic forces which are moving the market, which is the definition of fundamental analysis, with our key concentration on the Reserve Bank interest rate decision, which was taken in yesterday. We see the previous one was at 4.35%. The consensus, or the anticipated, was at 4.10%, and the actual one which came out was at 4.1%. So we see a decrease or a cut in interest rate by 0.25 basis point. This is made to salvage the economy by cutting interest rates so that money borrowed through loans can be acquired cheaply. This boosts the economy by injecting money supply back in the economy through various development made in investments, may it be manufacturing, may it be industry, and also on the flip side, bringing in good numbers of employment, and the economy is able to stabilize back again. Why is this quite trend that we're looking into today? Is simply because the Reserve Bank of Australia has been dovish in their approach of economic growth, and now we see a hawkish change of style, where we see altercation of interest rate cuts. And the last time this happened was in 2020 November. So we see quite a window of time that has taken the Reserve Australia back to cut interest rates. Moving on to the chart. Timoni aje? Ntamute hata kama utaki kunigotea for the assistance. Nice. Moving on to the charts. Projecting the Australian dollar, AUD, USD. Perfect. So we see an attempt to break out this high. This is because the Australian dollar power has been slightly increased. Of course, we are going to be monitoring what is the economic data coming from the United States with nothing major coming in the week. So we would like to see the highs to be taken out. If I go to a lower time frame to see it much more clearly, want to see these highs to be taken out and a price to break this key level here at 0.63723, and price to keep printing on the upside. Of course, we look into on pullbacks for us to get in for much more higher risk to reward trades, for us to maximize on the opportunity presented therein. Off to stocks, yesterday we looked at German 40, and we said that the DAX of the basket of 40 companies in Germany have been in an upward trajectory, and yesterday also closed bullish. So we will see a continuation of this like we spoke about yesterday, most likely. Of course, we are likely to face slight pullbacks as price continue printing on the upside due to the positive earning reports coming from that part of the world. On Nasdaq, the most performing basket of stocks, or US 100 as you may like, we see we are retesting the key level, printing with a doji which is in decision, and price to possibly keep printing on the upside. For US 30, we still in the consolidation, awaiting break on the upside to continue with this long-term uptrend. We shall be watching out for earning reports from those 30 companies which are put into that basket. For S&P 500, we see we are still attempting to break out the high, and we will be monitoring this. But as it stands, we have positive report earnings which will possibly break to the upside and keep printing in a bullish trajectory. On gold, yesterday we closed in with a bullish Marabuzu candle, or if you may like, a high momentum bullish candle. Would want to see the highs being broken out and the price to keep printing on the upside in continuation of this long-term trend. But to maximize on the opportunities, if I would go to a much more lower time frame, would want to see retracement to the downside for continuation of this particular trend. Now, if this is your first time to interact with the financial markets, you could tell your mentor or the lead who has led you to this chat box to help you establish an account with HFM. And in the instance you visit hfm.com, you could come here and register and fill in your details to have our experts get in touch with you for you to be availed to the various opportunities that are herein. Also, as a disclaimer, this by any chance is not financial advice. It's meant purely for educational purposes. It is important to do your due diligence and observe risk management for you to realize possible profits. That brings us to the closure of today's series of the Daily Morning Market Call. Until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Thank you and God bless.